Hello friends, I don't know how long I'll stay on the screen here. My phone stopped recording and I assume that there's some sort of memory issue where I hit delete and go to the thingy and clear my recent deleted videos and it should be there and it's just not giving me the memory. Don't know if I need to turn the phone off and on for it to sort of acknowledge it exists. I don't know. Let's take a look at Tezos together. If it disappeared, it doesn't matter. And what have we got on the go? Well, yeah, I drew all this in yesterday and I was joking about how I wouldn't remember what it was. But of course, we have these levels to the downside and we don't want to see the prices going down too much below there. We would rather see, this is the weekly chart I have at the minute, we'd rather see the prices move towards the upside. We've got a couple of things of concern. You know, we have a high over here in the weekly, which is a good thing. You know, basically just straight off the top, that's a good thing. But we've got the MACD doesn't show up because there's not enough information. That's funny. But we've got bearish divergence across the two oscillators that are actually showing up for us here in the weekly time frame. Let's go down to 24-hour time frame though and do the same investigation between this previous high and this high over here. There were equal highs. And we didn't equal the highs on the oscillators down below. So in that sense, they're class B bearishly divergent. So there's that to be aware of. And we know these levels towards the downside. Now overall though, what we're still looking for on this price action is, and, you know, it's no surprise that the prices have gone down when the Bitcoin prices went up dramatically. But what are we looking at here in terms of this thing? Well, of course, you know, we want this to be a top here, and to be characterized by a basin in between with a handle over here and the potential for a turnaround in prices. And what did we speak about before would be the ideal place in terms of that happening? Well, versus the Bitcoin price, it's right here on this 50% thing. Doesn't seem like much of a coincidence that it came all the way down to 3,100 to me, like we spoke about previously. We're at 3,200 at the minute. Want to see the prices go above the 21 EMA, move towards the top side. I'd still be content with the cup and handle notion, you know, going down towards the 618 to 29. I'd even be happy enough with remaining overall bullish on the thing down to 28, sitting in a higher low as part of this overall process. But, you know, at some point something's got to give. I'd rather that it was given towards the upside and that we were looking towards having a cup and handle formation set in there overall. As you know, between the two things we talk about, there's that bearish divergence, but between the recent price action over here, there's no bearish divergence. That's just continuing on. And what did we see in terms of like things like the this? We got right up to the very top of this of sort of the oversold zone, the edge of the bullish control zone, and didn't make it out of it there. We got rejected from the top of it and moved down a bit. That's okay, but we didn't also get sustained by the edge of it. That can be okay. We want this to go to the neutral line. We're in a bullish market from this point here. Movements down below here could be considered to be oversold should we see the prices turn around in a sense, you know. So we could see it come down and get rejected off the bearish control zone and then spring back up from that area, for instance. And in stochastics, you know, as we moved all the way up here, we actually got the go up to 93. It's very, very high. Looking back, that's the highest one it's had so far ever on the stochastics, and it's dropped down as a result from that, whilst not being divergent there between the last three highs on the time frame. So you know, that's all kind of seems organic enough to me, so that's fine. And then let's take a look at the dollar prices. Now, by the way, in this episode I saw a couple of people in the Discord talking about divergence. Actually, let me just check if I'm still recording myself. Haha, I'm still recording myself. That's funny. I don't know what happened. Maybe I'm not in the Bitcoin Ethereum. Oh, that would be bad. Whatever. Anyway, I'm here now. So, jeepers. Yeah, so let's take a look. Now, I did say I saw people discussing this concept of what is divergence and what are these things, and I'm just looking at them, and I'm new to trading and I'm still learning. And when I look at this indicator, I see this and I see that, and the sort of the new to trading type psychology stuff that everybody has in the Discord there. And I thought, well, hey, let's address that in this episode of Tezos 1 today and look a little bit at it and give a little bit of a couple of explanations as we look now. Right, actually going back over here and just going back up to the weekly, because this would make it easier since there's less information to look at, and that we spoke about it here already. Divergence happens, you can see that things are divergent. Divergent as a word just means things going apart, you know, and the opposite of divergence is called convergence in terms of the charts. You could say, you know, like if this RSI here had gone up higher than the previous high on the RSI, as the price action went up higher than the previous high on the price action, you could have said they were convergent. Of course, convergent means coming together, and that's kind of a bit of is the wrong word. It's more like correlate is better. Whether they're correlating or they're not correlating properly is a better way of looking at that. Anyhow. So that's. But anyway, people just talk about divergence. They don't really talk about convergence. And so then, what is bearish divergence? Well, that's bearish divergence. Where you can see that the here's the price action. You got your price. You got the candles showing you where the opens and closes were and all that. You've got the volume showing you how much volume was on the go there. And if you take these things and time and over time and whatever else, and you do calculations based on where this open was and this close and the previous highs, and of the last 12 highs or 24 or 14 highs or whatever, what the average high was and the average low was, and you divide them off each other and blah blah blah, you come up with these oscillators down below. And the MACD, for instance, as well, is like you get a couple of moving averages, and you get two moving averages. You get the 26 and the 21. You do, or the 26 and the 12, I think it is, and you take them off each other, and then that gives you a number, and that number is that line. And then on this number here, what you do is you create a 9-period moving average of that number, and it gives you this line, and that's the signal line. And people talk about these crossing over each other, and of course that basically means that when the average of the price action over the last 26 days versus the last 12 days is better than it was, it's been better than it was as a moving average of itself, then things are moving towards the upside. And likewise, if it's worse, then it's moving towards the downside. And that's where that comes in at. Now, the difference between the height of these two lines is represented in a histogram. As they cross, it goes to 0, as you can see here. So I don't use the lines. I don't like them really anyway. And I just use this for divergence, as I spoke about, so I can see the highs and lows and compare them to the highs and lows on the chart. So, and that's how that works. So when you see this as being as green, it doesn't mean go, and red doesn't mean stop. It's not as binary or sort of as simplistic as that, although you can say, in a sense, that there's just that there are general prevalent things that happen that you can look to and say, oh, this is going up, so this is going up, and that's true enough. But the more sophisticated way to use these things, and what they're really been designed for and how they're actually used by professionals, is actually to look at the relative difference between the heights of the peaks during an uptrend, for instance, or the basins or the troughs during a downtrend, and see if they continue to represent and go along with the price action on the candles themselves. And if they diverge away from each other, then there's potentially a reason for that, and it gives you a warning sign about things changing. Now, of course, all of these are calculated in slightly different but similar enough ways overall, so it gives you a good way to combine them together. And if all of them are screaming at you that it's divergent, then there's probably something going on. If all of them are so-called convergent, or just correlated with what's going on above, then that there's sort of no warning signs there, and you can look towards your other indicators and patterns and things like that to find out where the prices might be going. And so what do you do then when you're using these things is that you compare, say, this high here and this high here, and you look towards the high here and 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 the high here, and you say, look, they're the same, they correlate with each other, so there's no divergence there, so we don't need to worry too much as they're coming in here and setting in higher highs, that we're doing so under the compared to here, that we're doing so with diminished momentum and less people wanting to buy it and less people buying and selling, or whatever other factors that there might be, and there's a million different ways these things can transpire. It could be the price to move in one direction only takes one person to spend $1 on it, and if nobody's selling it for $100 difference, and the price moves $100, and all it takes is $1 to make it move that way, and that would show up in terms of the oscillators and whatnot. So the candle might be higher, but you might know that's not real so much compared to other candles which took thousands of dollars of transactions to make them happen, etc., etc., etc. And I encourage you to go off and read more about this sort of stuff, and read more about how to use oscillators, and develop your strategies and everything yourself off the back of that, and iterate through them and try and get better. Of course, as well, you look towards the previous highs and you look at them across different time frames. Now, this high here, which is higher than the previous high over here in terms of the daily time frame, and this is the legit previous high, is really where you'd have to make the comparison at. And as you can see, just running into this high here came in, and the RSI was up there. The next high came in, and the RSI wasn't able to go any higher. Stochastics weren't able to go any higher. MACD wasn't able to go any higher. It was divergent, and then we saw a drop down in price thereafter. And this is a warning sign. We call them warning signs because you can often operate in the face of divergence. If you've been watching long, you'll see me saying it all the time. Like when there's divergence there, but that doesn't necessarily mean anything. It's just a warning sign or whatever. So just so you can bear that in mind. So that's how that works. And between this high then and the previous high, it is divergent across the board. Is that right? Is the stochastics not quite the right? Yeah, the stochastics isn't. RSI clearly is, and the MACD clearly is as well. Slightly, just ever so slightly divergent. You got three classes of divergence. Between this high here and this high here on the MACD, you can see that there is a high on the price. but the MACD is the same height, which is class B. You can see here in the RSI that it's higher, so that's class A. You know, there and there. Sorry. There and there, the price is higher, but the action is clearly lower. Sorry, the RSI is clearly lower. Sorry, so that's class A bearish divergence. This is higher than here, and this price action is lower than here. Right, so that's class A. This is class B, and then you can get other sorts of things on the go as well for like class C, but obviously, or whatever. So equal highs, equal highs and whatever. So then you have class C, and obviously class A is stronger than class B, whatever, and that's enough for that. Now go off, read about it, look about it, learn a bit about that, and it'll help sort of give you that warning sign that you're looking for, that weather report, that sort of when you walk out the side, you feel the air and you think, is it going to rain or not today? Sometimes you go outside and you're like, definitely isn't, and it isn't, and you're fine. Sometimes you go outside and you're like, it maybe could, those are like the divergences. The sun might be shining, but the wind's blowing a bit stronger than normal, and feels a bit wet in the air. That's what you're looking for, these warning signs, where you could find out, there's something going on, right? Enough of that chat. Let's go over to the probably disappeared by now off the camera, who cares. I'll go over to the dollar prices and see what we've got going on to go. So obviously the Bitcoin price went up recently, so and so it was harder for it to continue to go up in the versus Bitcoin, but versus dollar we've seen the positivity from the overall industry bleed over here a little bit, but obviously not quite so much as you see the prices going down. There's two highs here, one high here and one high here. What do you see? Having had just a discussion about divergence there in between our two latest highs, if you want to call them that. What's that? I'll let you decide. I'll just not even describe it. There's the two peaks there. There's the two peaks there. There's the two peaks there. And there's the two peaks in there. This greener candle. Now, right. So what is that? It's bearishly divergent. Okay. What goes against that? Is this really a low, or is this just part of the overall upward movement? Is it really a low? Is that really low? Is that a local low? And this a local high, and this a local high. Is it really? Maybe over on a 4-hour time frame or something, but in the 24-hour time frame, not so much. It's really between this point and this point, and between this point and this point, this point, this point, this point, this point. What is that? Well, that's higher than here. That's higher than here. That's higher than here, and that's higher than here. So what's that? That's correlation, so that's not divergence. So that so then you can have. So then, what's it come down to? Subjectivity, subjectiveness. How do you see the market? How do you interpret that? How are you going to base your trading off of those things, off of that conflict? Is this a low? You answer it. You decide. Is this the low? And that or whatever you decide. Between those two things. Obviously, as well, there's hidden bearish divergence and hidden bullish divergence. I'm not going to talk about that today. In fact, actually, if you search my channel for divergence, I'm pretty sure I've got an episode about it. Then if you go on at the 4-hour time frame then, and you look in between these two areas, so this high and this high, what do you see? Well, this high and this high. This is lower and this is higher. So here, this is lower than this, but this price action is higher. This is lower on the MACD, this price action is higher. So what's that? That's bearishly divergent. What did we just speak about in the 24-hour time frame? Whether or not that there area here, whether or not this area here constitutes anything to be worth investigating or not, and that whereas over here in the 4-hour time frame it's spread out a bit more, and you can think about it a bit more, a bit differently. Now, how could this play out? This could play out with coming in and setting in another low here, perhaps lower than this low. And where would that put the price action? Well, it would put it above $2.30, above this area here, for instance, easily enough. Which over here in the 24-hour time frame, $2.35, that could be a higher low, right? And on the 4-hour time frame, that could be a lower low. So that's how these things all work out in terms of different time frames, in terms of different looking at things. That's what we're looking at right now in terms of the price action. In fact, I'll not do any more technical analysis on this coin today overall. I'll leave it at that since I've spoken so much about different stuff here. You can see that we're just below the 21 on the. Oh, I'll do 2 minutes more. Just below the 21 on the 4-hour time frame, the 21 EMA being supported by the 50 simple and the 50 whatever. But who cares about that? It's a small time frame that's not going to give us massive information. Over here on the 2-day time frame, how are we looking in terms of divergence? Would I look towards any of this with like great deal of curiosity? Not particularly. You can see that you could have some hidden bearish divergence perhaps if this doesn't go any higher on the stochastics. There is hidden bearish divergence where you get a higher high on the stochastics, but you don't actually higher here on the price action as part of what could potentially be a downward trend, where you've got highs, lower high, lower low, a lower high and a lower low. So this downward trend price action, you could then look towards that. That's kind of like, that's one of these things to look out for. That could be on the stochastic, so it's not on the other ones, not so much. I mean, it's just about on the RSI. It's class B on the RSI, you could say. Class B, hidden bearish divergence there. But and then of course overall in terms of the bigger picture, could we see the prices go down to $2.26 or so before turning around, or if they needed to? Well, you could. But anyway, enough of that. And as well, the hit BTC thing, actually, we'll go with hit BTC since I didn't do that today, and I like to do it because it's so freaking bullish, mad bullish talk, and to look at where we've been looking at, catch up with where we left off. We came up to our area here that we're speaking of, this downward sloping trend line, this of the big picture that we spoke about, the big picture. Touched it, didn't break above it. Is that much of a shock to anybody? Not really. Don't think it's a shock, seeing that happen. We're just below this 236, that we spoke about so often, that we want to see us breaking up above, finding resistance in around this area, and we're still above our horizontal lines here. So 272, 259 in terms of these two, 258 in terms of these two lines here towards the downside. That's to be looking out for. If we go past them, then you can easily imagine 240, 230 and whatnot coming in there thereafter in terms of finding our feet, hold again, and then towards the top side you've got the bar, the downward sloping trend line itself at sort of 290s area, and of course then this at $3.11. Should you break above them, you're breaking out of the channel as well. You're breaking 100% retrace on this area. You could look towards the next couple of levels at the $1 at the $3.70 area, for instance, and you're breaking above this trend line. You have to ask, are you having a fake out or a breakout, and what we're overall going on? And to be completely and absolutely fantastically and honestly, super duperly honest with you, to see things turn around here and come down and put in and come in for a higher low at $1.30 or something like that wouldn't actually be the craziest thing in the world. So we have to remain neutral overall when we look at this massive time frame. Plenty of places to look to on the way for where we'd want to see the prices turn around at, obviously, but you have to admit that this thing here exists currently. This line might be slightly wrong, might be better like that, in fact, and then you're looking at, they've got the 200 simple down there at these areas. Really don't want to see the prices going down below $1.64. We'll catch up with all that as it's happening. Of course, like I said, there's these areas beforehand. Thanks so much for tuning in. I'll catch you in the next episode. Do Bitcoin, Ethereum, the monthly. Fuck. Right, I've not actually finished yet. Looking at the monthly time frame, where have we got in the monthly? We've got a higher high in the monthly. That's great. We're trying to, there's the potential here on the RSI for divergence as we're putting in this high. There's a potential. Looking back the way though to where the actual previous high was, you can see that divergence isn't there. MACD is completely useless, obviously. We've got a higher high. Everything's really bullish overall in terms of the last, solid since the November 2018. Everything's been since February 2019. The last year has been really bullish overall in the monthly time frame. That's really good. Could we see things actually break out here and stuff? Well, we talk about it all the time. Of course you could, and all the same stuff applies. And as you can see in the monthly time frame, if you're to come in and set in a higher low, that could be all the way down, like we said, to where that blue line is at 160. So there's your monthly. We're closing that today. If they closed off, going a bit red, came down to 250 or 230 or so, or we got these lines and then kept going up again, that would be hardly anything in the grand scheme of things. So bear all that in mind. Thanks so much for tuning in. I'll catch you in the next episode.